This is a valuation exercise regarding Microsoft as part of the continuing series on featured stocks. Microsoft has been around for a long time, has a lot of analysts that follow the stock, so you think that the analysis of its valuation would be fairly straightforward. Reality, it's not, and we're going to get into it here, is why it is a bit more of a complex valuation than what we've been looking at recently. First off, let's look at the current valuation. The intrinsic or practical investment return is 4.5%. So, with all the defaults built into the valuation formula, on the surface doesn't look like much of an opportunity here for a very well-known company here, Microsoft. The theoretical valuation is only $64.12. Yet you can see here today's price is well over $115. We've got quite a disparity between the market price and the theoretical valuation. So we need to kind of understand more what's going on there. Well, we'll start just looking through the individual values that make up the valuation formula. And as a reminder, here is the valuation formula used by Polaris. So we'll be looking at the growth of sales, number of years is another input. Polaris uses 5. The future profit margin, future shares, multiply all that together, you get earnings per share, then multiply by future PE, and then you discount it back at a cost of capital, add it to the first term here, which is just the dividend stream, and you get an intrinsic value. So let's look at the most dominant, the two most dominant. First off is factors, which is the growth, sales growth, and the other one is the future PE. Well, sales growth is defaulting to 14. So the question is whether 14 is correct, so or appropriate. We're never going to know whether it's totally correct or not. So the way we typically do that is come down here and go off to the CNN site and look at the forecast section, and then scroll down to see what it's forecasting for sales. And you can see here that the growth annually being forecasted is about 11.5%. So 14% isn't that much different for a valuation exercise that would cause for any change. Scrolling up real quick, it's interesting that on this site with 33 analysts, the spread of these analysts' projection for the future, quite the spread, from 160 down to 75. That's why taking the advice of analysts not worth much when it really is worth nothing to have a range from 75 to 160. Might as well just roll the dice and see where you end up. But we need to, for our analysis, we're going to be a little more thoughtful, hopefully come up with a more, if not a correct valuation, at least a defensible valuation. So the first parameter or factor we're looking at in the input formula, sales growth, feel like 14% is appropriate for the foreseeable future, at least for the next 5 years. So the next dominant factor is the PE. I want to put that off just for a second. Let's talk about some of the other ones. Share issue trend, we can get an idea of kind of what the issue trend has been. And it's just been going down lately a little bit. Kind of hard to read with the way that this graph is, the legends of the graph are laid out, but you can see that the trend is generally down. Don't think it's really worthwhile to change much because, even if you change that to a repurchase of 3%, it's just not going to move the valuation much. So this is just not a parameter worth for Microsoft really doing much with. So let's look at the profit margin and look at the historical ranges of profit margin. You can see here that the current profit margin is 27%, but it's been all the way down to a negative number. Average is 18.3. It's been all the way up to 27. So I think the minimum you can say that we're probably negative earnings, or yeah, in fact, it had to be negative earnings to cause it to go negative. So, a PE that around 20 or so seems to be reasonable for the past, and probably based on that history, reasonable to assume that Microsoft's going to be able to maintain a profit margin. So the other input parameter would be the number of years that we would want to look to see if this 14% growth can sustain for more than just 5 years. And having briefly looked at that before I started the video, that's not going to result in it's going to result in a change if we take it up to 7 or 10 years. But don't think that's really realistic for Microsoft, again, such a mature company, to think that this growth spurt that they're going through currently is going to necessarily last for an extended period of time. And it just wouldn't get us even that much closer to the current price that the market is pricing the stock at, namely 115 from 64. So it's not the right place to spend our time. So that pretty much leaves the last parameter, the second most dominant parameter, is the future PE. So let's go off and look at the historical PE for Microsoft. And I went ahead and took it all the way back to when the company was formed, 1980. And you can see this over this time, the average is 28 over almost a 38-year period. The maximum has been all the way up close to 80, and periods have just been as low as 5. You can see here recently that there's been two distinct bumps in PE. It's been going along for quite a while, from year 2005 to 2015. It was by the 18-19 range. There was a little bit of a spike, and then it went up quite a bit here recently. And this is where we're getting the historical. Actually, where we're currently at is we're pretty close to the historical high PE. So the market has got factored into to the PE ratio, multiple quite a hopeful outlook for Microsoft, and the likelihood of this kind of a PE sustaining is almost zero. You can see in the history of Microsoft, never been able to sustain a PE like that. So to have a PE this high is not sustainable. We can look at some other. Well, that's the PE. Let's go, while we're thinking through this, I'd like to also look at the price history of Microsoft going all the way back to its beginnings. You can again see that it's somewhat followed the PE, not exactly, but and then we've had an enormous run up in the price here recently, primarily driven by the high PE ratio. Well, I want to compare that to some other stocks like General Electric. General Electric's been around even longer than Microsoft, and you can see that its price has spiked up several times. And right now, in fact, just yesterday they replaced their CEO, so they're going through quite a struggle right now. So when a company historically reaches a peak, there's just no place to go but down. So it doesn't just keep going forever. Another example in the same field as Microsoft is IBM. IBM's had several peaks in price, and then it comes back down, and kind of where IBM finds itself right now. So for a company like Microsoft to be spiking in terms of price, in terms of PE, kind of hitting on all cylinders, really can't expect that to last forever. So what to do about the PE? We could just say, well, the average PE is around 21. Mentioned that the current spike of around 80, is another option to use, but really 80 is not going to be practical. But we got to think through whether 21, if that's been the historical PE, would that be more of a reasonable PE? Because the PE that Polaris defaulted to, future PE, is based on mean reversion. And to refresh everybody's memory on what we mean by that, is that it means that we believe that the cost of capital, the price earnings multiple, is equal to its cost of capital when it hits mean reversion in the future. 1 plus that divided by the cost of capital. Well, let's go look at what the cost of capital for Microsoft currently is. It's been calculated to be 8.5% over the last 5 years. And now when we think through the future PE, we've got to think through the mean reversion of its cost of capital. That's more of a categorization exercise instead of a calculation. So it's been 8.5%, which is a little bit above what the average is for the S&P 500. And I think it's reasonable to assume that will be an ongoing required rate of return by the market. Being a high-tech company, we saw how volatile it is over a long period of time. That seems reasonable. That 8.5. So if we use the formula, we would likely end up calculating something around 13.7. Well, that's what leads us to the price or the valuation that we're looking at, 64.12. Now the question is Microsoft possibly in a unique situation where we mean reversion, there's an exception to it, and we've talked about in other videos in detail what these other two exceptions are to mean reversion. One is that companies do continue to earn high rates of return on their projects, primarily because of branding, just a good outlook for projects, and we won't go through that entire video where we talked about this in detail, but they eventually be capped by the growth of the economy. But that assumes that they stay in the market they're in, and they eventually saturate the market and therefore only grow based on the growth of the economy. But there's another exception, extremely rare exception, which is dealing with uncapped growth. And I think that's what we're looking at for Microsoft. And see if this doesn't describe Microsoft: a serial, successful reinventor of itself. Kind of a continually repivoting themselves into new growing markets. So, for example, for Microsoft, they've been a long time, or since their beginning, they've been viewed as a desktop operating system company. Then, last 10 years ago, they've been making a pivot into cloud services. And you can see with the spike in the PE that the market is obviously feeling there's a lot of other opportunities in that space that Microsoft will be successful in pivoting towards. And so it's bid up the PE quite a bit. So that's what I think what Microsoft is it's one of these few stocks, handful of stocks, that the market perceives as having uncapped growth. Well, let's think through what the growth would be when we talk about growth of earnings. Well, in the valuation PE video that I invite you to go look at, we talk a lot about this situation is what would be the growth of earnings. Well, for most companies that are in this situation, they kind of gravitate to a reinvestment rate of around 33%. So we're just going to go with that for Microsoft. And then it's a question of how much more are they going to be able to return on their projects above the cost of capital. And that's really where the PE that we're going to calculate here is driven by that factor right there. Is how much more above the cost of capital do we think Microsoft can earn or sustain earning into the future? Well, one way to look at this is, well, what is the current return that Microsoft is getting on its projects? Well, one way to look at that is the accounting definition is return on equity. Now, with Microsoft in particular, the return on equity is questionable as to the validity of it because of the way that accountants account for the purchase of treasury stock and things I won't go into in this video, but it's real questionable whether owner's equity in the denominator, return on equity, really is meaningful for Microsoft. But if we go forward with that, right now Microsoft has an ROE of around 20%. All right, let's look at it a different way. We can, by knowing the future sales, which is 14%, we can calculate the earnings. Well, we already said we're going to assume that future profit margin equals current profit margin, so that's just 1. And then the sales growth is around 14%. And really share growth is they're buying back a little, but not a lot, so we can assume that's just 1. So it turns out that the growth of earnings is equal to the growth of sales, which is about 14%. So now the question is, well, what's the current reinvestment that's being used? And then if we know that, we can calculate the current R. Well, that's not really easy to determine, but a rule of thumb is that most times a retention rate is about 1 minus 2 times the payout. Well, the current payout of Microsoft, the dividend payout, is about $1.80 on forecasted earnings of around a little over $4. So that works out to 40-some% payout. Now, if we multiply that by 2, and then 1 minus that, you only end up with a 20% reinvestment. And that's just too low. So we're going to back off and just use instead of 2 times the payout, which is just an average across the S&P 500. Just going to use for Microsoft 1 times the payout. So 1 minus the payout is about 60%. So if you use 60% for retention, and we're saying that the reinvestment, and we're saying the growth is 14%, so we just take 14% divided by 0.6, and you get a return of around 23%. So that's just another, we got ROE at 20, we got this calculation coming in around 23. So let's just make it easy and say that we're going to use a number of R for Microsoft of 20. Okay. Well, the cost of capital, we already assumed that we're going to go with 8.5%. So now we got kind of a range. The market, we feel like in the after the mean reversion has occurred, the market's going to continue to require 8.5%. But Microsoft has demonstrated that they can return about 20%. So that's our range. Do we go with 8.5? Do we go to 20? Well, 20 for sustainable forever seems a little unrealistic. 8.5 for a company like Microsoft. So this is the art of evaluation, is coming up with some defensible number. So let's just use the average in between those two of 8.5 and 20. So there's a different. That's about 15. So let's use a 15. Well, 15 would mean that we're using a factor. Not that we really have to calculate this now because we already got the number, but that would mean we're using a factor of, if we go with 15 divided by 0.085, yeah, we're using a factor of about 0.75. So we're assuming 75% greater cost of capital forever for Microsoft to be able to continue to pivot into new opportunities and continue to grow at 75% greater than the market required rate of return for the riskiness of its projects. Now that's quite a statement, but again, when we do this for companies, we're only doing this for just a handful of companies. All right, well, let's go forward. So we take it times a typical reinvestment rate of 0.33, and we get 0.15 times 0.333, and you get it right at a 5% growth. Well, let's plug it into the formula now. We have 8.5% minus 5, that's 3.5% in the denominator. Take the reciprocal of that, and you get 28.5. Take 28.5 times 0.666. You get 19 times 1.085. You get a future PE of about 21. So we go back to the the site here and we look at, the current average PE historically is 21, and we just calculated that we feel like that average could continue. Now I'm going to go back and look at the history here, and now I'm going to go back and just look at the last 5 years. You can see why I did this before the video, because this takes a while to calculate for some reason on this website. But when it comes back, I just want to show you that for the most recent 5 years of history, that the average is right around 21. So it's interesting that we're going to end up selecting a go forward future PE that is based on historical PE. I'm going to give this about 10 more seconds, and then going to have to just move forward. But I've done this in the past, and I know that the number works out to around 21 or so. All right, well, looks like that's just taking too long to go, so I'm just going to continue moving forward. All right, so we're going with a PE of 21. So let's look at what the 21 divided by 13.7 is. 21 divided by 13.7 is a round up to about 60% increase in valuation. So again, back to the formula that if we assume a different future PE, you divide out the current PE, multiply it by the new PE, and so the ratio of new to old is just multiplied by the current valuation. And the way we can do an equivalent, see that in the Polaris website, is just bump up this theoretical valuation by 60%. So 64 times 1.6 gives us a valuation of around 102. So I'm just going to move this till I see something in that range, and I'm just going to go with 107. So we end up with a practical investment return of 6.9%. So all things considered, we've had very good momentum in the price. In fact, we've seen that in the charts. The Microsoft stock has moved up quite a bit. This disparity of the analysts from 76 to 160 just shows that the kind of exercise that we're up against in terms of this kind of evaluation, where so much of the value is being built into the hopes and the dreams of what Microsoft could do in the future, which again is a very unusual for a company that's getting to be almost 40 years old. That here we are with a very high PE, and anyway, my own personal view is that based on other big companies that have come before Microsoft, primarily IBM, these peaks don't last forever. How long will this one play out? How long will it take to play out? We could be here for another 5 years, but it will play out. And the PE that we're currently factoring in with a theoretical valuation of 107 likely will come back to reality, and this long-term future outlook that's captured in the future PE will be back to more historical norms. But for right now, we can justify a price of 107 for the practical valuation and an investment return of 6.9. Well, for me, this is too much of a speculative play at this point. And it just relies too much on the story and investors to continue to believe in the story. It seems like one little hiccup by Microsoft and the story will look different, and we'll see a big change to the PE, future PE, and they'll cause a swift change in the overall price. So 6.9% is just not a sufficient enough return for this kind of outlook for Microsoft. So currently rating Microsoft as a suspect. Thanks for watching.